Good evening, everyone. We'll now start with illustration number 37. An absolutely amazing question on retirement of partner. We start reading. Fair brother, Grit Batch, and Crystal were partners sharing profits and losses in the ratio 2 is to 2 is to 1. This is their profit sharing ratio. Kristen wants to retire. Don't know why. On 31st of December 2008. Given below is the balance sheet. Don't waste time reading balance sheet. Come to last line. Pass necessary journal entries and draft balance sheet of Fair Brother and Red Patch. Okay, let's read the adjustments to see what and all items have to be written in the inner column. Fair Brother and Great Batch agree to share profits in 3 is to 2. This is their new profit sharing ratio. Using this, we would have to compute our gain ratio or use these ratios to adjust the goodwill with these ratios. So you can do that. There is no need to compute gain ratio. Value of goodwill is to be taken at 50. Fantastic. They have given us the value. We don't have to compute goodwill. Fixed assets have to be revalued upward by 30. So far, we don't know if they want us to do memorandum revaluation, but so please do make a star next to sundry fixed assets because this should go to inner column in our balance sheet, to which we're going to add 30,000 towards sundry fixed assets revaluation. What do we have after that? Fixed assets revalued upward. Then we have stock is going to be adjusted for 10,000. Put one star next to stock. Unless until it is a question on memorandum revaluation, stock value will change in your balance sheet. Bills receivable dishonored 5,000. Yeah. When bills is dishonored, what would happen? Our debtors will increase, bills will decrease. So this will affect both debtors and bills. Right. After that, what do we have? Bills receivable dishonored on 31st March, but not recorded. We will do now. Dishonor bill was due to insolvency. Bad debts. Should adjust our debtors again. So debtors, one more adjustment. We will add that bills dishonor to debtors and then we'll immediately deduct it. We'll add that bills dishonor to debtors by deducting from bills and we'll however again deduct it from debtors because it is bad debt. Any profit or loss arising on reconstitution will not be transferred to P&L account, it will be transferred to revaluation. So such bad debts what we decrease from debtors, after adding 5, when we deduct 5,000 from debtors, that will be transferred to revaluation account. But then, what do we have after that? Fair Brother and Great Batch agreed to bring sufficient cash. Wow, this is the beautiful point. They're going to bring sufficient cash. ಬೇಕಾದಷ್ಟು cash. Yeah. So when they see cash, no, Great Brother and Fair Brother. So Great Batch and Fair Brother. Both of them will tell. ನನ್ನ ಹತ್ರನೂ ಇದೆ ಇದೇ ತರದ್ದು ಚಿನ್ನದು ಅದ್ರ ಕೆಳಗಡೆ ಇದೆ ಟೇಬಲ್ ಅದು ಚಿನ್ನದು ಕ್ರಿಸ್ಟಿಯನ್ ವಿಲಾಸ್ ನಿಮ್ಮ ಹತ್ರ ತುಂಬಾ ಚಿನ್ನ ಇದೆ ಅಂತ ಅನ್ಸುತ್ತೆ ಸೊ ಫೇರ್ ಬ್ರದರ್ ಅಂಡ್ ಗ್ರೇಟ್ ಬ್ಯಾಚ್ ವಿಲ್ ಸೇ ಹೇಳಿ ತೀರ್ಸ್ಬಿಡೋಣ ಸಾಲ ಎಷ್ಟಿತ್ತು ಸೊ ಅಂಡ್ ಟು ಮೇಕ್ ದೇರ್ ಕ್ಯಾಪಿಟಲ್ ಪ್ರೊಪೋರ್ಷನೇಟ್ also they wanted to maintain 75,000 bank balance. This is very interesting. This is the point which will make this question interesting. If you remove this question, this will become a toothless crocodile. No use. If you remove this adjustment from this question, it is a toothless crocodile. Literally. No, pointless actually. Pointless question if we remove this from this question. So, what you should understand from this is they have existing bank balance of 50. How much bank balance? Out of this 50,000, that Christian, whenever he retires, would have to pay Christian. No, don't pay Christian 60,000. You would have to pay 60,000 plus revaluation profit plus goodwill plus any other adjustments that's arising towards Christian. Entire money should reserves everything. When you pay Christian, no, from 50 you will pay Christian his share. After paying, there should be still 75,000 that should be there in the balance sheet. Oh, will they print notes? No. Red Branch and Fair Brother agreed to bring any amount of money that is required. They're ready to bring any amount. The money that they bring is not in ratio of their capital. After they bring the money, their capital closing balance will be there. That should be in their profit sharing ratio. What will be there after retirement? You get it? 50,000 is there. To this 50, Fair Brother and Great Batch will bring some capital. After they bring, will pay Christian his share of capital on retirement. And still 75,000 should be there. Are you getting it? How much should they bring? We don't know. We don't know. After they bring, such amount will go to capital account of Great Batch and Fair Brother. After you write that additional capital, you get closing balance. That resulting closing balance in capital account of fair brother and great batch should be in new profit sharing ratio. That's what they say. Read this line. What does it say? Fair brother and great batch agreed to bring sufficient cash to discharge the claim of Christian and to make their capital proportionate. Also, they want to maintain 75,000 bank balance for working capital. And they do not want to show the villain books of accounts. That is easy. We've done so many questions on admission, so many questions before admission. We know how to close the books without showing goodwill. Correct or no? Let's do this. Shall we? Come on, let's start from the beginning. Is this on memorandum revaluation? No, this is not memorandum revaluation. It's proper revaluation. So let's start. In the beginning, old profit sharing ratio 2 is to 2 is to 1. Let's leave little space for revaluation account, little space for partners capital account, little space for bank account and balance sheet, and then write old profit sharing ratio. What is it? Fair brother, Great Batch, and Christian 2 is to 2 is to 1. This is the old profit sharing ratio. Got it? Now read the first item. Capital. Fair brother, Great Batch, Christian. 120, 80, 60. Where do I write? Partners capital account. On the credit side, I'll write balance product. Come to our partners capital. By balance product. Much fair brother. 120. Great batch. 8. Christian 6. But this, if you closely observe, fair brother, great batch, Christian. KGF. Eldorado. The city of gold is here. Got it. Observe ಮಾಡಿಲ್ಲಲ್ಲ reserve of 10,000. Reserve of 10,000 will share it to partners in profit sharing ratio. I'll write here by reserve. This is the amount 10,000. Old profit sharing ratio 2 by 5, 2 by 5, 1 by 5. 4, 4 and 2. Got it? Then what do we have? Sundry creditors. No adjustment whatsoever. New balance sheet 50,000. Liability side. Ange banti. Correct or not? Liability side, sundry creditors, 50,000. Done. Now come to asset side. Sundry fixed asset 1 lakh 50, balance sheet asset side at inner column. Then top 50,000, again inner column. Then debtors 50,000, again inner column. Then bills receivable 20, inner column. But debtors has 2 stars. Debtors has but distance maintained money. Bills receivable 20. Then we have bank balance 20. And there are too many adjustments. There is going to be additional capital brought in by Great Batch, by Fair Brother, money withdrawn by Christian, 75,000 should be maintained. If you want, you can open ledger. But if you think you can handle it, you can write here only in the income column. What would I do? I will show within the balance sheet also. I will show separate ledger account also. Whichever you want to do with the Excel, how not doing. But do one. Here or there. Some people will do both, some people will not. That's the problem. We are extremes. We polarize things. ಈ ಮಾಡಿದ್ರೆ ಫುಲ್ ಮಾಡಿಲ್ಲ ಏನು ಮಾಡಿದ್ರೆ ಉಗಾದಿ ಇಲ್ಲ ಅಂದ್ರೆ ಶಿವ fair brother and great batch. Company share profit in what ratio? That is their new profit sharing ratio. Should I compute gain ratio? Oh, we have a secret table with us. You give us all the answers. Magic table. इस तरफ से एंट्री डालो, उस तरफ से आंसर निकले. ऐसा मशीन बनाऊंगा. इस तरफ से गुडविल डालो, उस तरफ से जर्नल एंट्री निकालो. Sorry. What do we have after that? So goodwill is to be taken at 50,000. Shall we adjust goodwill now? No. Adjust goodwill. Raising goodwill in a crediting old partners in old profit sharing ratio. 2 is to 2 is to 1. Credit 20, 20, 10. Total 50. Now let us write this off by debiting the continuing partners capital account in new profit sharing ratio. 3 is to 2. Only fair brother and great batch. 30 debit, 20 debit. Instant 10,000 credit. 20 year. 2020, 0. So 20 credit, 20 debit, 0. Fair brother, 10,000 debit. So on retirement of Christian, no, Great Batch is like, no, I won't touch your goodwill. I don't want. Get this? Parara. Fair brother is like, I want it. I will take your goodwill of 10,000. So we should cut 10,000 from Fair brother's capital, give 10,000 to Christian. This is to be adjusted without raising goodwill up. So don't write goodwill anyway. Sir, narration you write. Hopefully you know. So entry is fair brother account debit to Christian 10,000 temple. Understood this? So let's go to capital. In capital account, fair brother, I will debit by 10,000. Christian. And in Christian column, I will credit by 10,000. Christian should receive 10,000 from fair brother. Fair brother should pay 10,000 to Christian. Fair brother's capital will decrease debit. Christian's capital will increase credit. Yes or no? ಅರ್ಥ ಆಯ್ತಾ? Next adjustment. What's after that? So then fixed assets should be revalued upward by 30. Shall we add fixed assets 30,000? Come to balance sheet. Fixed assets 150 is there. Add 30, making it 1,80,000. This 30,000 increase, fixed assets will be debited. Revaluation account will be entries fixed assets account debit to revaluation. So in revaluation, I should write 5 fixed assets. Or in other terms, this is going to be profit. Am I right? So, then what's happening to stocks? Stocks by 10,000. Yeah. So what should we do? We should increase the stock by 10,000. So I will add to stocks by 10,000. You get this? Everyone understood? Okay. 50 plus 10, 60. So stock value is increasing. So what is the journal entry? Stock account debit to revaluation. So in revaluation account, what do you write? Buy stock, okay. Not bench stock. 10,000. Bench stock ಅಂತ ಹೇಳ್ತೀವಿ. Bills receivable dishonored by 5,000. When bills receivable is dishonored by 5,000, what would happen? Debtors will decrease by 5,000. Sorry, debtors will increase by 5,000. Bills receivable will decrease by 0. Got it? In this one, brought it around. Bills receivable will decrease. What is the journal entry? We've done chapter 6, unit 1. Bills receivable, dishonored. Roy. Debtors account debit to bills receivable. Bill will throw it back on his face and ask him to pay money. So bills receivable, it deduct 5. Debtors, I will add 5. This year, relieve over 15. But here, not yet over. Why? After that, they've told that it turned out to be bad debt. See this? Dishonor of the bill was due to insolvency of customer. The customer jumped into water and it didn't dishonor. Body was floating. Insolvent. Basically meaning, yeah. What do you mean by insolvency? When you put it in the water, the space in the water molecules is not sufficient to dissolve the solid molecules. That is what we call insolvency. Correct or not? It's okay. So here the water molecules represent the assets and the solid that you put is called liability. And the liability, what you feel, cannot be occupied by the assets. Liability will remain unresolved. Here the liabilities are more than assets, so he could not pay. For him it is deficiency. For us it is loss, bad debts, bad debts. Journal entry is bad debts account debit to debtors. Later will transfer it to P&L, P&L to bad debts. That is in normal case. In admission, retirement, death, or reconstitution, any profit or any loss should be transferred to the Satya. Should be transferred to revaluation account. So we will not write bad debts. We will straight away write revaluation account debit to debtors. Revaluation account debit to. So in debtors, I will deduct here bad debts. That is revaluation. How much? 5. This will be 50. ನಾನು ಹೇಳಿಲ್ವಾ ಏನು ಚೇಂಜ್ ಆಗಲ್ಲ ಅಂತ. Is remaining 50. This minus 5,000 is there, no? This minus 5,000, we will done revaluation account. It is like loss. In revaluation account, I will write debit side. What do I write? 2 debtors. 5,000. Sir, I want to write 2 bad debts, right? Sir, I want to write 2 insolvency, right? Sir, I want to write 2 bill dishonored. Hey, write whatever you want. It is the same. Understood? But you write 5,000 rupees. Or you want to write Rohit. Okay. Also, what side? Birth side. Fair brother and great batch agree to bring sufficient cash. Bantu nodi, your favorite adjustment. They agree to bring sufficient cash to discharge the claim. They agree to bring sufficient cash to discharge the claim. So in your bank account, we have opening balance. How much is opening balance? 50. They will bring enough money to fair brother and great batch to discharge the claim to Christian. So you will pay money to Christian. After that, you want to have closing balance. How much? 75,000. So you bring in some money, you pay some money. After that, you are left with 75. How much would you bring in? How much would you give? That's the question. The most important thing is that the cherry on the cake is after they bring in, you write it here, no, in partner's capital account as to how much will they bring. Whatever the balancing figure you get as balance carried out between fair brother and great batch should be in capital sharing, sorry, profit sharing ratio. That's it. Question is very ಇಲ್ಲ. Question ಮುಗಿದೋಯ್ತು. But before I do that, adjustment regarding how much will they bring, how much will they give to Christian. Christian, how much should he collect? We know. How? We know everything of Christian. Only thing that we don't know yet is revaluation. We'll close revaluation. We get revaluation profit or loss. So we do Christian account. No opening capital. We know reserve. We know revaluation profit or loss. Understand how much money should be given to Christian? Will we close revaluation? Come on, revaluation. 40,000 on the credit side. 5,000 here. Balancing figure 35,000 should be shared to partners. Who? Everyone. Fair brother, great batch, Christian. In what ratio? 3 is to 2 is to 1 alva. Sorry, 2 is to 2 is to 2 is to 1. 35 into 2 by 5, 35 into 2 by 5, 35 into 1 by 5. 14, 14. Let us write in partners capital account on credit side. Shall I write here? Option. 14, 14 and 7. How much should we give to Christian? 60, 77, 79,000. 79,000 should be given to Christian. Sure. Are we giving 79? Yeah, they told no. Pay charge, they don't do it. They are going to pay full money to Christian. So, Christian, no balance carried. Christian, Tata, bye bye. Bank account. Understood. So, in Christian account, capital account, if I write two bank, in bank account, I should write by Christian 17, 17. Now, we know in bank account how much money should they bring. We can find here balancing figure. We can write it here. Fair brother and great batch together will bring so much money. In capital account also, I'll write here. I can find balancing figures. But whatever balancing figure you find here should be in capital ratio. Or should be in profit sharing ratio. So what do we do? You understood now where we are stuck. In bank account, we can here also let's finish it. 79 plus 75. How much? 1,54,000. How much cash should they bring? They should basically bring 1,04,000. Balance sheet only correspond bank 75,000. How much bank? 70. Should pay Christian 79,000. They should bring in additional capital. How much? That also will 1,04,000. Got it. Balance sheet also will tally here. We need to write fair brother in great batch. But how much? That should be in profit sharing ratio. That should be in profit sharing ratio. How do we do it? We have 1,04,000 here. 1,04,000 ಇಲ್ಲಿ ಗೊತ್ತು ನಮಗೆ. We know that it is 1,04,000. But how much will fair brother bring? How much will great batch bring? Huh? You put it in profit sharing ratio. If you put the amount that they bring in profit sharing ratio, this balance you won't get in profit sharing ratio. And this one. Profit sharing. That's it. Simple. See, we don't know in individually fair brother and great batch, how much will they bring? We don't know. Correct? So take 120 plus 4, take your calculator. Take 120 plus 4 plus 40. Okay, now minus 10 fair brothers. You have balancing figure only for fair brother now, no? Add 80 plus 4 plus 14 also. And also take 1,04,000. So instead of seeing fair brother and great batch separate, see them took together. Instead of seeing them separate, see them took together. So took together, you know how much is the balance carried out total. 3 lakh. Share that in profit sharing ratio and write here balancing figure. You understood? How much? 1,98,000 and great batch 1,00,000. Now find this as balancing figure ulta. What do we get? 10,000 plus 1,98,000, 2,08,000, 1,32,000. 2,08,000, 1,32,000. Balancing figure degree. What do we get? Come on. 70,000 and 34. Understood this? 70 plus 34 is 1 lakh. Are you getting it? We knew ishtu gottu namige. And this much we know. We know this total is 1,04,000, but individually how much we don't know. After we split that 1 lakh 4 between fair brother and grid batch in whatever amounts, balancing figure what we get here should be in profit sharing ratio. So what to do? Instead of seeing these two columns separate, see individually we don't know 1 lakh 4. Together we know 1 lakh 4. No. Don't see fair brother and grid batch. See it together. And add 1 lakh 4. Identify total balancing figure. What I did is this. 1 lakh 20 plus 8,000 plus 4,000 plus 4,000 plus 40,000 plus 40,000 plus 1 lakh 4 minus 10,000. You got 3 lakh 13. Share it in profit sharing ratio. 3 by 5 square. Okay? Yeah. Engage. Like that. Or there's one more easier way. Shall I teach you what is easier way? This you don't do, okay? This little country type. Balance sheet ಎಲ್ಲ ಇದೆಯಾ ಬ್ಯಾಲೆನ್ಸ್ ಶೀಟ್ ಬ್ಯಾಲೆನ್ಸಿಂಗ್ ಫಿಗರ್ ತೆಗೆದುಕೊಳ್ಳಿ. Take balancing figure in balance sheet. You will get capital. Share it between fair brother and great batch in profit sharing ratio. Put that here. And then you will get this bank as balancing figure. Yes, sir. Balance sheet bank balancing figure ಹೇಳ್ಕೊಡ್ತಾರೆ. ಯಾರು ಹೇಳ್ಕೊಟ್ಟಿದ್ದು ನಿಮ್ಗೆ ಅಕೌಂಟ್ಸ್ ಅಲ್ಲಿ? ನಮಗೆ ಚೆನ್ನಾಗಿರೋರು ಹೇಳ್ಕೊಟ್ರು. ಇದೆಲ್ಲ ಹೇಳ್ಕೊಟ್ಟಿಲ್ಲ. ಸ್ವಲ್ಪ ಹಂಗೆ ಅರ್ಥ ಕೊಡ್ತೀವಿ. Got it? Not right. Still works in the exam if in case you panic. Check. I'll teach you. It will work. See. 180 plus 60, 240, 290, 305, 390. Sorry, 380. 380 minus 50, 330. 330 you share in the ratio. 132 and 188. Put 130 to 188. You can split this entire working note. You will get this 7834 as answer. Because everything else is known. But you can do like ing ಮಾಡಿದ್ರು ಅದೇ ಹಂಗ್ ಮಾಡಿದ್ರು ಅದು. Understood? ಹೆಂಗಾದ್ರೂ ಬಡಿ. But are you getting it? That's it. Isn't this a memorable question for you people? Did you like this question? Fantastic. So you can also do the working note little differently if you want. For presentation sake, you can write their capital to be 1 lakh 20 and 80. Reserve, you will share it to them. And you'll also write their revaluation profits. And then you know how much is the goodwill adjustment also. Minus 10. Together you know that it is silence. 2 lakh 26. Additional capital, we know that it is 1 lakh 4 and total we know 3 lakh 30. Share it between them 198, 132 and find this as balancing figure. That's what we did. Are you getting it? But this can be skipped in the exam. You can straight away do it within the lecture. Did you all get it? That's it, dear friends. I hope you had fun. ಅಷ್ಟೇ ಫ್ರೆಂಡ್ಸ್ ಇಷ್ಟೆಲ್ಲ ಕಷ್ಟಪಡ್ತೀನಿ